Real-time payments. Can I have a round of applause to just introduce the panel up on stage? So let's make him feel comfortable. All right. Now moderating this panel is Katrina Stuart. She's executive sponsor to Move, NPP and Australian Payments Plus. So welcome to the stage, and I'll let you take it away.
Thank you, and thanks everyone for joining us this afternoon. I am joined by my eminent panellists here. So first of all, Divya Reddy, founder and CEO of Payru, platform that helps Australian businesses streamline payroll, super and compliance. I'm going to work my way down here. Ben Stiles, who was a last minute ring-in for, sorry, but only because Riley went and had a baby girl, so great congratulations to him. But Ben is the CCO at Super API, who is helping payroll and HR platforms meet proposed Payday Super requirements. Brad Goodall, CEO and co-founder of Banked, a pay-by-bank platform used by banks and merchants globally. And last but no means least, we have David Green, who is the Chief Commercial Officer at Manoeuvre. So we don't have a lot of time, so we might kind of get into it. We're talking about instant gratification. What does that mean to you in terms of when you think about payments, and why is it important now? What's driving that urgency, do you think? Who wants to jump in first?
Well, maybe I'll take it away from a little bit of a unique perspective, in the sense that what we found when you talk about real-time payments in Australia is it's very, very quick to become a consumer-focused conversation. How quickly does the consumer get paid? How quickly can a business pay a consumer? We're actually a RegTech, and at Super API what we do is we help those that run payroll, whether you're a payroll provider, so Payru, actually one of our clients, or whether you're a large ERP or HR platform, you as an employer need to know that you've paid your employees correctly and in time, not only for payroll, but upcoming next year, July 1, 2026, you have to know that you've paid your employees correctly on superannuation. Anyone who's not from Australia, superannuation is our retirement fund infrastructure here in Australia, and uniquely, it's about to be the only kind of payment in Australia that is actually by law required to be paid within a certain period of time. So it must be paid within 7 days, and that's been essentially when we talk about gratification, we're actually right now standing in front of payroll managers, HR directors, and their problem is, how do I make sure? And when we show them, well, you can make sure, we make sure that we get the data right up front, and we send the payment, and we tell you that it's gone through in real time. Instantly they know they're not going to get the fine that actually applies on every single employee that they fail to pay within 7 days. So every employer in Australia is going to get fined. If they don't, instant gratification means you're not going to get fined. So it's a bit of a different take that's going to be a pretty big thing for the next year.
Yeah, I'm just going to add to that a little bit, because completely agree. Instant gratification in my head sounds like an indulgence, but through compliance, through all the regulatory checks and everything becoming a need, it's no longer a gratification. It's just trust, well-being, with all of the need for employees to get paid at the right time. It's more of a need than gratification. Yep. And it's so going to be something that employees will just expect. And
becoming more of a necessity. Right, and expected.
Yeah.
Thoughts, Brad?
Yeah, I think if I take the other side, at a consumer level, I think instant is doing a lot of heavy lifting in instant gratification, whereas I think from a customer's perspective, the gratification in instant gratification is probably the thing they're more interested in. So, when you click a button to make a payment, people know, or particularly, forget about it, and they just assume that the merchant will look after that at the other end. I think what it does do, though, is it gives you a gateway into how do you make that payment gratifying to the customer, whether that's choice or maybe even better loyalty, or there's some sort of trust in there. And I think that more and more account-to-account payments are being seen as a gateway, whether that's because of cost purposes, whether it's because of settlement, but they're being seen as a gateway around things like loyalty, and then also, how you build a relationship with a customer. So if you took another example of, say, paying a utility bill, often utilities providers just aren't able to have a conversation once it's been set up. The ability to send a payment link, to set up a payment, to insert yourself in that flow and then allow a conversation to be had could be the gratifying thing between the merchant and the consumer.
Hi.
Okay.
All of the above. I think that, from a personal perspective, it's more a feeling that that's kind of the connotation that I have about being gratified immediately. I also think about my kids, and they want something. They are not known to be very patient in my household, so instant is pretty key for them. But I think ultimately what my fellow panel members have said is more about it's a mechanism to be able to build trust. So having things like transparency, just knowing where things are at or what the next best action is. So it doesn't necessarily mean that something is instantly gratifying and that means you're at the end of something. It actually might mean that there is another option or another pathway or and. So it's just having transparency, I think, through the process.
I certainly know my daughter expects instant gratification when she's sending me messages while she's on the train and saying, I need money to get out at the other end. So yes, definitely, I think consumer expectations are evolving. Brad, I want to come back to you a bit. Obviously, you work with merchants and banks in a number of markets around the world. Interested in your perspectives in terms of what are you seeing as the biggest shifts in real-time payments and what are some of the lessons that we might be able to learn here in Australia?
I think one of them is that, and if I just take Pay by Bank for a second, Pay by Bank is probably a feature, not the whole product. And I think that more and more what you're seeing in other markets is how that product and that money movement gets bundled. And so the money movement part is, like I said before, from a consumer's perspective, not the interesting bit. I think as an industry, we can sometimes get caught up on that. Actually, ironically for you, Katrina, that's the thing that you really want to be caught up on. But outside of the rails, when you're building on top of that, it's really about like what else is being bundled. So as I said before, loyalty is one thing. I think identity verification and packaging up that, onboarding with an immediate payment to start the relationship or a large high value payment. The reverse of that, confirmation of payee being bundled with payouts, I think is, you're starting to see that. And then I think the other big one as a learning is really around how is this getting to the merchant and, what are you doing on behalf of thinking about the developer and how they will bring this into their system. And so whether that's connecting up to various platforms, whether it's providing a single API with multiple services like confirmation of payee plus money movement, and what is it that they are expecting to get. And I think that because account to account is still quite nascent, really starting to publish a roadmap of features and functions as you see the consumer adoption and merchant adoption and try to foretell the future, I think is really key. And that's some of the stuff that I see in other markets and probably a thing that I think Australia is a little bit behind on in terms of really trying to put themselves at the heart of, we've got a lot to do on consumer experience for sure, and that will evolve at the pace because you've got lots of other providers, banks and others that are in the mix. But also, what is it that we're doing to ensure that the merchant and the developer at the merchant is being accounted for to make this a seamless experience as they sort of see now with cards and other types of payment methods.
Mm-hmm. So very much about how you kind of actually bring some of those different capabilities together and transparency to that kind of future roadmap, and then thinking about that kind of end-to-end sort of experience from a merchant perspective as some of the key things.
That's right.
So we touched on a little bit at the beginning, and obviously I know 3 organisations sitting up here are very heavily involved in this, but Payday Super is going to be probably one of the most significant kind of upcoming changes in our payments landscape in the imminent future. How ready do you think the ecosystem is to make super payments real time? And what do you think kind of needs to happen as we think about this change and manage it from an industry perspective?
It's going to be a different answer depending on who you talk to at the moment. So there's a lot of energy going into making sure that all stakeholders are aware of actually how big a lift that is. A lot of people aren't aware today that if their employer pays super quarterly, that's got to go to potentially weekly, definitely monthly, and even if your employer currently pays your super quarterly, that doesn't mean it goes through straight away. Depending on how that payment is routed, it could take up to 90 days in some really worst case scenarios, and you'll see it happen within 7 days. So going to everything being within 7 days is a very, very big lift. It's an enormous lift. And actually the solution is not a faster payment. So we're here to talk about faster payments, but the solution isn't a faster payment because, in fact, no matter how fast you send that data, you've got to make sure it reconciles at the other end at the superannuation fund. And funnily, Brad was just giving an example, talking about instant gratification, that maybe my loyalty points, for example, accrued straight away. I'm just, riffing on you a little bit there. It might be that I paid and I saw that shipping's being arranged straight away, right? And the developers are getting that API call, bang, the payment's arrived. Well, it's actually the same with superannuation. However, superannuation does not have any of that in the current network capability. So we've actually built that. We're working with the GNGB network to provide that instant messaging back to the employer, but we can't do that to the employers ourselves, and we're actually working with Payru, with Maneuver to do that through multiple payroll platforms. But Thea, did you want to maybe explain a little bit how that works in practice?
Oh yeah, so Super has as a payment, and Ben's articulated it really well, where it's now moving from 90 days to 7. It was a separate payment altogether, not related to payroll. Now, everyone needs to do it through their payroll platform, and it needs to happen within their pay run and payroll that they currently do. So we've built a way to, like Ben was saying, instant payments are a tick. We can do that. We already do that. So we, in a way, are Payday Super ready already. What we need and what we need to line up is the regulation, is how we get responses back from the funds that it has been processed, not been processed. So the catching up of everything else around that is quite significant, and the cash flow for businesses that actually need to do this. So I work with small businesses up to large. Some of the small businesses don't make enough to be able to pay every payday for super. Some of them have good cash flows, can make that happen every payday. So what that means to employees themselves, what it means to the payroll staff that need to validate every single super fund for every payday is a huge shift. And we're working with Super API to make sure that the validation of the super funds, the super stapling, all of the employee details are right at every point in time and not just at the start, and you need to catch up, say, once a quarter to make sure everything was working, and then you had 3 months to fix it. Now all of that is changing. So all of this catch up needs to happen before the regulation comes into effect in July, if it does, and everyone says it should. And there's great benefits of this going up and running, but all of these other things need to also line up. So really gearing up to making sure everything else lines up as well. Yeah.
Yep, certainly an exciting change. David, any perspectives from you and kind of the role that Maneuver's playing in this?
I mean, we've been looking at the space for a little while, obviously with the guys at Super API and a few of the payroll platforms. I mean, ultimately it's there to benefit us as employees, but also it's also there to benefit employers, right? So what we can do is we can utilise the real-time network to help optimise cash flows. So you don't have to, if you're an employer, you're not having to pre-fund or fund a long time in advance, sometimes up to a month, your superannuation contribution lump sums for your employees, and that has a significant impact on working capital. So like we're utilising the MPP rails to be able to help businesses optimise the way that they pay their employees, but ultimately also provide, like the holistic solution provides a regulatory coverage, which is super important, pardon the pun.
So obviously Payday Super is being kind of sort of driven from a sort of government policy perspective. Brad, I'm interested in your perspectives in terms of what do you see from your kind of customers as being the kind of driving force for why they want to kind of look to adopt real-time payments?
I think it depends on the market. I think, like, if we were just to focus it on Australia, like the opportunity in Australia is obviously to realise a heavy amount of investment that's been put into modernising the payment rails here, and it's very helpful that things like superannuation are gripping it, because it's, traditionally, if you're not using a payment method, multiple times, 3 to 5 at least a month, then it's not really a payment method for you. And so getting into those really trusted places, obviously, Amazon launched this here, and that is going to really help. And I think I would say that one of the important factors, though, is that getting the merchants to do all of the heavy lifting is not the answer. And I think that part of the reason for that is because a lot of the people that are coming to this are coming for different reasons. And so you might find that in one particular niche you think you've nailed it, but you're trying to essentially productize in an entire industry and country's payment rails. And so it really does rely on pretty heavy collaboration. I think that the customer experience, when we see people say in the UK and even in the US, like if you take the US as a good example, they really are viewing this as how do I solve for paper to digital? There's a heavy check penetration in the US, and so how do I reduce down check volumes, and how do I utilize real-time payment methods and digital payments to do that? I think there are certain large brands in the US that could take advantage of consumer to business, but it's definitely not ready for scale in the US. And I think that as a country, they, and as a banking industry, they probably know that, and so they will let merchants kind of pick and choose as to the speed that they go at. But yeah, I guess the point is that every industry vertical is going to be different in what they're coming and bringing this to, and I don't think, and I've said this a few times, money movement is not it. Like money movement is, it's there today in Australia. You have BECS, you have cards, card penetration's high, it's pretty low, you've got low interchange. It'll be for something different than that, and it'll be for, consumer affinity, it'll be for rewarding loyalty, it'll be for having more conversations with the consumer than you were able to with some of the other, and finding ways to make sure that the payment is a gateway to something else as opposed to being disjointed. And I think that's really where you're seeing the sorts of consumer adoption, or in fact business adoption, globally.
I think certainly from what we're seeing, that when you kind of see that the payment part gets integrated into broader other processes as well, and business processes, and kind of the benefits that can be unlocked from that, and bringing together as well other capabilities, not just with the speed of the payment, but as you touched on earlier, things like confirmation of Payee for Payou validation, also thinking about things like digital identity and how that might kind of be integrated into the payment flow. It's actually when you kind of bring some of those capabilities together, it's that overall kind of bundle. It's not just the payment itself and how quickly that money moves. It's really, I think we touched on as well about the data that can travel there as well, and the benefit that can unleash as well, and what that means, particularly in the B2B space.
Yeah, I think spending more time on innovating around how you bundle all of those things to then drive adoption, as opposed to how do I get this money movement into this brand because it's got a large number of customers, is certainly a more helpful way of attacking the problem.
And we're definitely kind of doing that in the payroll space, even though it's like starkly opposite. We do confirmation of Payee to make sure it is the employee bank account. It is the way that it needs to happen, bundled up with Payto. Payto not catching up altogether with B2B and in all business banking. How do we get PayID solution integrated with it as a holistic bundle to give an offering that NBB can offer as a holistic solution to get what we need, rather than just stick to one or two capabilities.
So we kind of talk about all the great things that real-time payments can unleash, but sometimes reality isn't exactly sort of perfect, and we know that there are still things that we need to focus on as an industry. Where, from your perspective, does kind of instant still feel a bit clunky? Where do we need to put more attention, be it the customer experience or the merchant integration or whatever it might be, and what do we think we need to do from an industry perspective to make that better for everyone?
I feel like a really good lesson can always be learned when you just look at where successful payment networks have occurred in the past and still exist today. And one is the scheme networks, whether it's Visa, MasterCard or Amex. They did a really good job, 60s, 70s, 80s of helping merchants understand, and even to today, so there's lots of people in the room here that sell payments, and that one of the ways that you help a merchant understand the value of methods, and you were talking about methods before, Brad, you're not really using that method unless you use it frequently as a consumer or even as a merchant. And why are you using it as a merchant? You'd only use it if you believe that it increases your checkout size or it increases your ability to reconcile. Checkout size was a huge one, very in the early days. And I feel like where the opportunity can be missed around faster payments of any kind, whether it's bank to bank, whether it's Payto or Roscoe, it doesn't really matter, is this idea of the benefit is from that trust, and the benefit from knowing what's going to happen can often be much greater than the speed of the payment itself. So, we were given these payroll examples before, very different to a merchant. Maybe you'll get a bigger checkout size if you offer credit. In payroll, if you know for a fact that you've used Payru and every single employee that you onboarded this week actually had their bank account validated, and Payroll already does that, then you know that every single person that you onboarded this week is going to get paid right time, first time. And that is the real benefit, and the reconciliation that then makes available to you, because guess what? Your accountant asks you to reconcile every single one of those transactions as well. And if it doesn't reconcile just right, which requires data, which comes back through the MPP network, then you're just not going to be in a good position. And so that is where the opportunity, I think, sometimes gets missed. However, I look at some of the people in this room that, I know have been in the industry for a long time, and they're nailing that conversation now, right? It's absolutely getting through. But when it doesn't get through, I think that's often what's missed.
I reckon one of the things maybe that is a bit of a trick is that everyone wants adoption, and so the mechanism of that adoption is through consumers. So we're really focusing on consumers, but we can't forget about businesses. Like, businesses are an account-to-account mechanism because of the ATV, the transaction values, like an ad valorem fee makes a transaction cost quite expensive. So the opportunity is that with the MPP, businesses can get to digitise and make that real-time transaction instant, right? And so that brings about enormous opportunity. And we see that in multiple use cases, some really cool ones. We see the ability to help a utility company automate reconciliations, right? And so that's not necessarily, the benefit of that is not that they get to receive the money instantly. It's actually, it's multiple. One is that if someone overpays, we'll recognise the amount that should be received and refund instantly the delta. So then me as a customer that's overpaid my gas bill, there's no impact on me or my cash flow. So that's on the customer side. On the merchant side, there's no impact to their operational or their customer success. They don't have to, account for funding that's, that is unallocated or unreconcilable. So there's all those types of things. So you're getting efficiencies not just by receiving the money, but actually operationally. So there's some real massive benefits from those sorts of things. Like with car sales, we've built the ability with these ledger accounts, ledger wallets, to be able to receive money in. We bought a secondhand car using it, and so rather than me walk around the mean streets of Dulwich Hill in New South Wales with thousands of dollars of cash, we could instantly buy the car, exchange the money, and the money was in the seller's bank account instantly. So there's just those, all of a sudden then you're going to start to see these cool use cases that don't necessarily sit at front end at a checkout on a merchant's website.
Consistency of consumer experience in the mandate creation, and making that as consumer friendly as possible is the number one thing you can focus on right now. For sure, Australia has a really good opportunity. The mandate solution is is world class. If you think about the UK or if you think about the US even, very, very different. But you're going to fall behind if you can't get that consistent and and utilise the capabilities that exist technically with banking apps to make sure that it's as consumer friendly as possible.
Yep. And now's time to focus on that and kind of get that in place. I'm conscious we're about 45 seconds left. Just very quickly, each of you, what do you think's next and what do you hope we're talking about, say, in 2 years' time when we talk about real-time payments? Got about 10 seconds.
Oh, let me go. I think earned wage access, I didn't think I did touch on that at all, but with cost of living pressures and everything in terms of real-time payments and salaries reaching the employees instantly, all of that is so important with the crisis that we're talking about at Intersekt in a couple of days as well. But in the next 2 years, in 2027, I think super, tax, salary all need to be instant. That needs to be a way of being and a need. And then we further improve in the financial wellbeing space through earned wage access and all of the other cool things that we can provide employees as a result of that. Yep.
Great. Any closing thoughts? Because I think we're out of time.
Oh, look, I'd just sort of second that, but on the other side, in that, a lot of these pressures around faster payment put pressure on employers. And so you can already see quite a few companies starting to spin up now or have been around for a while who are working on payroll funding. And if you're working in the payroll funding space and you're able to get the payments with certainty, make the payment with certainty, spin up virtual accounts, you can probably provide that service quite efficiently. So I think that's something that will emerge as well.
Just build product on top of the rails and into the payment so that we're not talking about the payment anymore, that we're actually talking about the way that consumers or businesses paid each other and the value they got from the money movement.
Great.
Yeah, I agree. Ubiquity of experience.
Yeah.
I think that's
fundamentally important. Yeah. Great. Well, thank you. Please join me in thanking all of the panellists today.